Federal Reserve is planning to raise interest rates as soon as March in an attempt to slow the rise of inflation. The chairman hinted at it earlier this year. So to talk more about what this means for you and your money, BMO Harris Vice Chair Eric Smith is joining us. Eric, nice talking to you today.
Micah, it's great to be with you.
Of course, we want to know, what does this mean for the consumers? And we really won't be affected only a couple of ways, right?
That's right. Today was a really important day as we kick off the new year. We always look to the Fed to provide some clues as an early indication for how they're thinking about monetary policy. And from today's meeting, we could clearly tell from Chairman Powell that the direction will be to raise interest rates. I think what we also were able to glean is that we're likely to see at least 4, possibly more interest rate rises over the foreseeable future. That's in large part due to the fact that we need to be aggressive in trying to help drive a thriving economy because of the inflation pressures that we're seeing right now. It's hitting all of us, whether it's at the grocery store or at the gas pump. And in order for us to make sure that we're getting our economy where we need to be with stable pricing, the Fed will need to take that aggressive action.
And Eric, this really means for us that the cost of borrowing could come up if you're buying a car or if you're buying a house, right?
That's right. That will affect us in terms of home ownership. It will affect us in terms of our credit cards. It will affect small businesses, but we believe that it will be at a modest level. We have enjoyed a historically low interest rate for some time. And I think what the Fed is really indicating to us right now is that our economy is in a strong enough place that we can now move beyond sort of 0% interest rates to a place that we can also help to fight off the threat of inflation. Another indication that we're really seeing that was really strong is that our labor market has remained very, very solid. Wages are going up and job openings are plentiful. So we want to make sure that we maintain that level of economic stability.
Another good news piece of this, that if you have investments or savings, that could go up as far as interest rates, right?
That's right. I would say right now in the short term, we're likely to see, because we have uncertainty, we're likely to see some volatility in the market. But the long-term view is to always be invested in the broader equity markets. And we believe that the underlying economic indicators would suggest that we will continue to see a strong market environment overall.
The last time interest rates went up was March of 2020, which of course was because of the pandemic. But by doing that, that pretty much solidified the economy, didn't it?
It did. And I think right now what we're really looking at, Micah, is that there's still some uncertainty because of the current Omicron wave. That will have an impact on the economy, which is still yet to be determined, particularly as we think about restaurants, the hotel industry, travel industry, and also what it means in terms of those people that have not been able to work because they've been out sick. So we need to wait to see what the impact of that's going to be. And I think the Fed is telling us that they will be humble but nimble, meaning that they will go as quickly or as slowly as they see appropriate in order to make sure that we get it right.
And the main reason, as you said, is trying to raise it up is because of inflation. They need to get that under control. But then again, what if it backfires?
Well, if it backfires, we still have the tools in our arsenal to make sure that we can pull the levers at the appropriate pace. When the Fed last started raising rates in 2015 during the last crisis, they actually went at a very measured pace. We have the ability to actually go faster. We could, instead of quarter-point raises, we could do 50 basis points. Instead of doing this all over the course of a period of time, we could front-load it. The other variables that we have is also how the Fed will decide to shrink the balance sheet. So there are a number of tools that we have, and I'm very pleased that our officials are taking action to make sure that we get it right.
So I guess the phrase is not to worry?
I would say stay calm and carry on. That's the important message today.
I like that. BMO Harris Vice Chair Eric Smith, nice to talk to you, my friend. Be safe, be well.
All right.